Hey guys, Dave with Moneyology here. Hope everyone is having a great weekend. Today is October 19th, 2019, and this is the Weekend Market Review Public Edition, where we take a look at the markets, various different sectors, various different areas of the globe from a weekly perspective to give us a better sense of where the market has been, where it is, and where it's likely headed. The overall theme today is inflation. I think you'll find a common, consistent theme that equity markets are starting to break out. Commodity markets are starting to really perk up. We're not going to go through all of these here, and interest rates are starting to bottom. So this is the overall theme. Let's take a look and dive in. All right, starting with the 10-year U.S. Treasury. Uh, First and foremost, notice that we are creating positive divergences, right? So we double bottomed here with positive divergence, and now for those new to our videos, by the way, this is momentum. This is RSI. This is, in our opinion, as important, if not more important, than price, because momentum leads price, not the other way around. So what you have right now is that you have a double top in momentum, right? But price is much lower today than it was last time we hit this high. So bottom line is we're consolidating below the 13 EMA around 1.75, but I firmly believe we're going higher, likely testing that 2.1 range before possibly pulling back some more. I think before this run is over, we might be at 2.5 on the 10-year U.S. Treasury, and this bodes well for equities, for the overall economy, and I think it probably doesn't bode too well for longer term fixed income. So whereas that sector has done really well, that asset class, so far this year, I saw 20-year Treasury bonds were up about 20% at some point this year. So that's probably going to pull back some. Notice PPO is firmly in above zero. And frankly, when was the last time that happened? It happened just a little bit in October of last year. So it's been a while. In fact, all of 2019, the 10-year Treasury has been negative until this month. So that's a very interesting development. All right, so you've got the Dow Jones 2500 index, the Wilshire 2500. And these are the 2,500 largest companies in the United States and basically globally. And notice that we're still in a downtrend of momentum, right? And that a lot of folks have been pointing to this. Effectively, this is a negative divergence. We're creating new highs and new lows, but we haven't broken down. Every time we've hit these support levels, we've bounced, we've sliced through them a couple times, but ultimately we've bounced higher. And it looks to me like we're very, very close to breaking this trend line to the upside. We've done it on a number of different indices that we'll cover here. So that tells me that things look like they want to be heading to the upside. You see, PPO is making lower or higher highs, and so momentum, I think, is just creating a stair-step pattern to move to the upside. We've bounced off of that 13-week moving average support, and I think we're headed to new all-time highs on the 2500 index. Here's Dr. Copper. Dr. Copper has broken out of this momentum symmetrical triangle. It hasn't done so in price yet, right? So this is the key: is that we broke out. We couldn't break above the 50. We didn't have enough momentum there. Back tested the breakout levels, and we're headed higher again. And this time with much more momentum. Notice we're over here at 41 on the JJC, but momentum is nearly as high as we were when we were at 42. So and you see that the moving averages are curling to the upside. Here we are already. The moving averages were kind of rolling over, and here they haven't even started rolling higher. So this is an inverse head and shoulders. And notice again, PPO is higher, substantially so, for the first time since, effectively, this is the first time PPO is moving up since early part of February of last year. So we've got a lot of momentum. Once this breaks the 50 RSI level, or perhaps if it breaks the 50 RSI level, I think that copper is really going to take off. We've had a couple premium reviews of the copper sector, but as copper really breaks out, we'll be covering it in even more depth. But there are opportunities that you ought to be looking at in copper. Obviously, some of the bigger names we've covered. FCX, Freeport is one that's been absolutely hit over the last couple of months, and if not years. But I think you're setting up for opportunity for the next 12 to 24 months of 100 to 200% gains, in my humble opinion. Of course, just one opinion, and you're going to find them in a lot of these copper names. So stay tuned for our premium reviews there. Emerging markets, notice this broke out of the symmetrical triangle right now. You've got the moving averages as support. We've broken out above the 50 as well as the trend line. That's a very, very positive sign because when you have the confluence of resistance of the 50 RSI and the trend line, that's very tough to break through. We've done it. That's another sign that inflation is likely headed higher and commodities are likely headed higher and the US dollar likely headed lower. So notice PPO moving to the upside, very bullish sign. Gold. So gold's pulled back, and what's interesting is that gold's pulled back from a high of 1537 to a low of, I think the low was close to about let's say 1475, right? And it's bounced off of this 13 EMA, and gold miners, some of them who have done exceptionally well, have sold off considerably, and a lot of folks have been panicking. And I just said, listen, if you believe in the fundamental story of what you own, then there's no reason to panic. If you know the strategy behind why you invest and how you invest in the time frame, and you've position sized accordingly, there's no reason to panic. If you've taken some gains at the top, if you've been lucky enough to find to purchase a stock or two that have been up 200-300%, take some off the top when these things happen, because pullbacks are very, very healthy and very, very painful at the same time. So, and let this be a good opportunity. If you missed selling, I think gold has bottomed here, and I think gold, bounced off that 61 level, and I think it's headed back towards that 1540 level and likely breaks to the upside. Precious metals look really good here, and we've covered them in premium and freemium reviews, and I think you're going to find a lot of great opportunities. The bull run is just in the first couple innings, guys. Precious metals are going to be absolutely booming over the next 2 years. High yield bond. Notice high yield bond effectively back tested this breakout zone and successfully so. Bounced off the 13 EMA, and that's a really good sign for the overall markets when credit is breaking out. And notice that we've basically been in negative momentum since June, since May. But we've started creating a higher low, and that's a positive sign. And I think credit is moving to the upside. That's a very good sign. Look at this housing, guys. Housing is in extremely overbought territory, but if you're a short-term trader, that's a problem. If you're a long-term investor, swing investor like I am, this is a very, very positive sign. I think housing is a very good barometer on the health of the overall economy. Notice PPO is firming, doing really well, and I think we're going to break out certainly towards that 364 level and probably break out to new all-time highs in housing. Light crude oil, so crude oil. Oil's been in negative, I would say in a negative trajectory since April of 2019, and it's creating higher lows in PPO momentum. But it's really, really hard right now to invest in oil because there's just so much volatility right now. It's technically the price is still negative. It's below the 13, below the 26 EMAs. And though I see a lot of positive divergences in the various ETFs, and I think there are going to be some really good opportunities, until there's confirmation, this is still in the downtrend. So my hunch is that this will break out, but hunches don't matter in trading. Let the markets dictate what they want to do. And my point is right now, oil is still until it breaks above the 56 level, this right around here, there's really and confirms it and holds there for a couple of weeks. There's not much to discuss in terms of investing long term. Nasdaq seems to be breaking close to breaking all-time highs. We've bounced off of the support levels of the 26 and 13 EMAs, and it looks like we're headed towards a break above this trend line, but we haven't done it yet. So that's something to watch for. Slightly higher low in PPO is a very good sign, and let's see what happens. Nasdaq has been one of the weakest of the major indices, and that's okay. but it's definitely one area that we need to be very aware of in case the markets do turn lower. Okay, couple of ratio charts. Here's the 10-year to the 2-year. That's the yield curve. And notice the yield curve is very, very close to breaking out. Now, at this point, we can call it just a back test. But the power of this move from the lows, when we are literally at a flat yield curve, and folks were saying negative yield curve, recession, etc. in the media, I was saying we've got positive divergence here. And now you've got the 13 EMA very close to crossing above the 26 EMA, bullish crossover. I think that the 10-year is really going to run, as I pointed to earlier. The 2-year likely drops due to continual cuts by the Fed, and so that is going to create a very, very bullish environment globally. All right, here's this the high yield bond to the treasuries, to the 7 to 10-year treasuries. If this ratio breaks higher, that's a very bullish sign for the overall economy. This is roughly a trend line here that's breaking right now. Notice it back tested and effectively back tested the 38 level, and now it's breaking towards that 50 RSI. I think that's going to break out. If it doesn't do so right away, it's going to might take a little time, but that's going to break out. And PPO is now above zero, and that's a very, very positive sign. And I think you're just going to see the risk on trade is definitely here, guys. Russell 2000, small caps relative to the large caps. You want to see small caps breaking out. Well, it's happening right now, guys. If you do a pairs trade, it's not what I do, but a lot of the hedge funds, they might be shorting the S&P and going long the small caps, just in terms of a quote unquote riskless trade. Look, you've got a breakout here in RSI. You've got a successful back test, break back above the 38 level, and it's on its way. This ratio is suggesting that small caps are the sector you want to own if you want to own equities in the U.S. I mean, I think that this chart is very clear. You're going to see a very, very nice relative and absolute return relative to the S&P. 20-year Treasury versus the TIPS. So this is deflation. This is inflation. If deflation starts underperforming inflation, that's a very bullish sign for the market. Negative divergence, even as we hit double top. So this could have been a back test with negative divergence, and it looks like inflation or the deflation indicator is breaking down, and that means inflation and the risk on trade is going higher. And I've said this ratio likely heads towards that 1.15 level, if not lower, all the way to the 1.1 level, and that would be a very bullish sign again for the equities. Here's another one: the discretionary sector versus staples. One discretionary sector is hot. That means consumer spending is hot. That means the overall economy is strong. Notice here we are breaking right now. Close the week above the 50 RSI level, above this trend line. Slightly so you need some confirmation, but that's a very, very positive sign. It hasn't happened since 2018 when the sector has started to underperform. But notice PPO is very close to upside breakout, and that's a very, very strong sign for the economy. Russell 2000, small caps, very close to breaking above this trend line. We closed the week both above the trend line and above the 50 RSI level. That's what I'm talking about, guys. We are breaking here above the 13 and 26 EMAs, and I think the Russell is going to head to new highs this year or into next year. Well, this year has got 2.5 months into it. That might be a stretch to say we're headed to all-time highs this year, but we're on their way. And I think that you're going to see 10 to 20% returns in some of the small cap names over the next couple of months. Here's the equal weight S&P. That's already broken out of this downtrend here, and that S&P is looking strong. Here's the SPX index. Okay, so the S&P 500 still hasn't broken out, which tells me that the breadth is very strong when the equal weight, which is an equal weighted average of all the stocks in the sector, has broken out already, whereas the S&P index has not, and that's simply saying that some of the larger names have pulled back and have not been as strong, but they're not the best barometer on the economy. These guys are, right? And so I think that that's a very positive sign that the equal weight is breaking out against the just the size weighting index. All right, regional banking ETF KRE, and this one is very close to breaking out here. We found support, and I think that again, this is a sign that this index believes that interest rates are headed higher because that's how banks make money. Margins go up, and I think this is an indication that we could not retest those lows as we had been doing, and it looks like we're very very close to an upside breakout in the banking sector. Semiconductors. So semiconductors, this is kind of a traditional bearish wedge here. So it's very possible we squeeze and then we break lower here for a little while. But momentum has broken to the upside, and that's a very bullish sign. So it's equally as likely at this point that price moves to the upside. Semiconductors are a very good gauge and barometer on the overall health of the economy. Bottom line is we're near all-time highs right now. Very, very close to it. That's not a bearish indicator. All right, so here's the SPY. Again, very close to the upside breakout on the S&P's largest ETF. Total stock market index just under all-time highs right now. That's very, very bullish to see. We haven't yet broken out of momentum, but it's happening. It's going to happen very soon. Notice higher lows in PPO. Dow Transports, we are above the 50 RSI and we are above this trend line ever slightly so. Like the small caps, the Russell 2000, I think the Dow Jones Transportation Average is a very, very bullish indicator of what's ready to take place in the markets. Meanwhile, here's the US dollar. And this is why emerging markets, this is why commodities are starting to pick up. You'll see in some videos that I'm going to be covering throughout the week. Base metals, copper, steel, aluminum, they're starting to really perk up. There's a lot of momentum, even amidst the weakness. Even uranium is starting to perk up. So you're seeing a lot of opportunities, and in large part, that's because the dollar is breaking down. We had a negative divergence here as we double topped around 99, and then a major breakdown. The euro, meanwhile, has been breaking out, and that's typically a very bullish sign for precious metals. If this trend line does not hold, then the dollar is on its way back to about 95.50. Perhaps a couple weeks of consolidation, and I think eventually we head lower towards that 92 level, possibly as low as 88 on the downside. Look, the president in the United States wants the dollar lower, and I think he's going to get it. Whether or not he's responsible for it is irrelevant. The markets are trading this to the downside. The VEA, the Developed Markets ETF, that's bounced off the 13 and 26 EMAs and is breaking to not all-time highs, but certainly 52-week highs right now. And that's a very, very positive sign. Momentum has already broken the downtrend. I'm not a fan of the developed markets like Japan and Europe, but look, this is an area that's breaking out despite all the pessimism. I mean, you can even potentially say this is a long-term inverse head and shoulders, and we might have a multi-year run to the upside in these markets. So definitely want to be diversified in your core portfolios to developed and emerging markets. Meanwhile, the volatility index is breaking down, and we broke down. We've the 13 EMA is about to cross over against the 26 to the downside. I think we're headed towards 12, possibly even lower towards 9. And you notice PPO is really below zero for the first time since July, and I don't think it's going to stop for a while there. Finally here, Wilshire 5,000, 5,000 largest names. So that includes small caps, mid caps, and large caps, breaking close to all-time highs. And if you draw this, so we're very close to an upside breakout, and it looks like we're doing one of these for a while there. And again, another bullish sign. So that's it, guys. Looks like I don't have. I already covered emerging markets here. Let me actually do one more thing. I want to go through. I would like to go through the weekly ETF list and just very quickly look at which names are the strongest according to the SCTR momentum gauge. So SCTR Home construction, palladium, gold miners, home builders, junior miners, Greece. Not what you see in a bear market. Greece is up close to 40% this year. Again, a lot of real estate you see here and precious metals, right? Russia, surprised there again to a lot of folks. But precious metals, home construction, and real estate. Now, to the downside, you see again natural gas, oil, small caps, and a lot of the countries that are very well tied to closely tied to oil, right? But you see lithium, you see metals and mining, you see some of these ETFs that are uranium, and I think we're starting to find a lot of momentum. Now, steel, it might take some time. It might take a couple of weeks. It might take a couple of months. But I'm telling you guys, you got to do your due diligence here. Don't chase those names at the other side of this momentum gauge. Check them now, because that's where you're going to find 200% opportunities. Natural gas is breaking down right now, but it's got momentum and a positive divergence. So it might take some time, but I think natural gas at some point breaks this downtrend. Hasn't happened yet. Excuse me, but I think it's something that's going to take place. You've got steel. That steel is starting to build constructive steps to break out above this downtrend. Very positive signs. MACDs are close to breaking above zero. We'll cover that in more depth in the steel video. Lithium, same thing. Lithium has built positive divergence. Even as we created new lows, lithium did not do that. I think we're very close to an upside breakout in lithium. So another opportunity here for massive gains in some well-defined companies. Uranium, this has been in a downtrend since, frankly, since 2011, but just in this chart, since 2017 has been in a well-defined downtrend. It's had a fake breakdown here. MACDs are above zero right now. We're very close to an upside breakout. Of course, it's very possible this rolls back over, but I just don't see it right now with the MACDs where they are. I think we're eventually going to break higher. Does it happen next week or in a month from now? Anybody's guess. But again, just pointing out, you're seeing a lot of this sort of these sort of trends starting to take place underneath the surface. Let me point out one more here. There was a metals and mining. Let me see if I can't find that here. Metals and mining. This is largely like base miners. Look at that, guys. We're this downtrend is a very well-defined downtrend, right? But even as we had a 1, 2, 3, effectively a 4-time bottom, momentum has been building, stronger momentum every single time. That's a very positive sign for an eventual breakout to the upside. No one can predict when that happens, but you can see what's happening and be ready when it does. So that's it for me, guys. Let me know what you think. Would appreciate your support. If you want to be subscribed to our free list, send me a note at dave@moneyology.com. We send occasional blogs, notifications, and so on. Eventually, that'll be embedded into our website. We're working on that, working on a number of changes that we're excited about. And I appreciate all the support that you guys can give. And one more point. Again, Monday, Tuesday, I'll be out of commission. I'm going to try to post a couple of videos today and be back Tuesday night for new updates on what's taking place in the market. All right, guys, have a great day and rest of the week.